everyone. I am Kim Hughes, and thank you so much for joining me for the Sane Crypto Podcast. Today I'm going to be talking with Rich Dad, Poor Dad author Robert Kiyosaki about cryptocurrency and how it fits into his view of the world, which he will be expanding on in his new book coming out, I think, this fall, called Fake. Fake money, fake teachers, and fake assets. And by the way, a couple of times in the interview, you're going to hear Robert refer to me as Kim Snyder. Snyder is my maiden name. Hughes is my married name, just in case you're wondering. Robert Kiyosaki, welcome to the Sane Crypto Podcast.
Well, thank you, Kim. I haven't talked to you in years, and it's interesting that you're now a polo player.
I know it's been a coon's age, hasn't it?
Yeah, I mean, polo. I love Polo, the brand, but me and a horse don't get along very well.
Nothing like it.
That's such a big animal to move around.
Right? That's part of what makes it so amazing, that primal connection between you and a 1,200-pound animal that doesn't have to do what you ask. So let's jump in here. And probably most of our listeners know that you've written something like, I don't know, I've lost count, 27 books, I think, including the #1 best-selling personal finance book of all time, Rich Dad, Poor Dad. For those who are unfamiliar, can you just give us the really quick summary of Rich Dad, Poor Dad, since that's where it kind of all flows from?
Yeah, I mean, Rich Dad, Poor Dad is a true story. I'm fourth generation Japanese American, which means I don't speak Japanese. And, my poor dad was a PhD, went to University of Hawaii, Stanford, Northwestern University of Chicago. And as a little boy, I realized our schools weren't teaching us anything about money because my old man, poor dad, he kept saying, go back to school, get my MBA, get my PhD. And I realized if I did that, I'd be poor just like him. So at the age of 9, I went looking for another mentor or teacher. And in the little town of Hilo, Hawaii, there weren't very many mentors or teachers except my rich dad. And Rich Dad was a guy who never went to school. And he owned most of the real estate and businesses in town. And then when I was 19, I was at age 9, I started studying with him, just playing Monopoly with him. He was teaching me, plus working in his office, doing the real things. And then when I was 19, I went to school in New York, the U.S. Merchant Marine Academy. And I came back home to Hawaii from New York to Hawaii, and Rich Dad now owned the biggest hotel in Waikiki. So I realized he was playing Monopoly for real. 4 greenhouses, red hotel. So in 10 years, he went from 4 greenhouses to the biggest hotel on Waikiki Beach, and today it's called the Hyatt Regency, which just recently sold for $800 million. He picked it up for 1.2. So that's the story of Rich Dad, Poor Dad. And I wrote the book because you and I share something in common. I remember I was talking to you and you realized your financial planner or your stockbroker or whatever has lost all your money. And I remember Kim Snyder's classic line, I don't need you to lose my money. I don't need your help to lose my money. And I think many people are going through that wake-up call right now. They realize they've been sold a bill of goods. Go to school, get a job, work hard, get out of debt, save money, and invest in a 401k or an IRA. And, in my opinion, that used to work. It's not going to work today. So that's why I wrote Rich Dad, Poor Dad.
Mm-hmm. And so you and I have crossed with the idea of cash flow assets. You and I are both big proponents of cash flow assets. You are more on the real estate and oil and gas side. I'm more on the paper asset side. But you've also always been a big advocate for gold, which is something that I traditionally have not been invested in, at least not physical gold. More, I've held it at times as paper gold. But so can you tell me the job that gold does in your portfolio?
Right. Well, gold is the objective. And I don't save money because I don't need money. I mean, I use debt. I debt, I'm in debt $600 million, which is over half a billion. So what happened in 1971, the U.S. dollar became debt when Nixon took the dollar off the gold standard. And I was flying in Vietnam at the time, actually in 72, and I realized a bait and switch had taken place. So when he took the dollar off the gold standard in 72, I went on the gold standard. And I mean, no offense, but I don't mean paper gold because, as a fractional reserve system, you know that paper gold, there's no gold in there. It's fraction.
Right.
So you could have, for every 1 ounce of gold, there might be 100 ounces of paper gold. And that's why I've never trusted paper. I've also taken 3 companies public through the Canadian exchanges, through Toronto. And I understand the game of paper. There's a new book called a movie out called The China Hustle. Its executive producer is Mark Cuban. And everybody who likes stocks and stuff like that, they should watch that movie, The China Hustle. It's a documentary on how after the crash of 2008, Wall Street was desperate. They needed some more fake assets. So they went and they started promoting China deals. And the advantage I had was that in 1998, 10 years earlier, I was part of that China hustle. So I understand the game that people play between paper and tangibles, which is oil and gas. So you can buy paper oil by buying Exxon, or I can buy real oil, which is a private placement. And I don't recommend what I do, you know that, Kim.
Sure.
So I just write about what I do. I don't recommend what I do. That's why pump and promote my book coming out is called Fake Money, Fake Teachers, and Fake Assets. And as I'm sure you know, there's something coming down the pike. There are a lot of people going to get wiped out. So I'd rather have even fake gold than a stock right now.
Yeah. Well, so let me come back to the gold again, because I want to understand it, and I want our listeners to understand as well, because I'm going somewhere specific with this. So do you, I believe I think I know the answer, but I'm going to ask anyway. Do you always hold physical gold?
Yes.
That's what I thought.
I'm on the personal gold standard. But you have to understand the fractional reserve system, which is the banking system. The fractional reserve system was you go to your local bank, be it Bank of America, whatever it is, and you put $100 in there, the bank lends out 1,000. That's why savers are losers. It's called they can lend out more than they have. And that is the system. The whole system is built on fractional reserve. So if I have, the Federal Reserve Bank, I think they have 800 million or billion in gold. Well, that's all loaned out through other ETFs and things like that. Mm-hmm. So I decided not to participate in that game.
And so with that physical gold, is that just as a hedge for either the collapse of the financial system, hyperinflation, or what have you? Or are you actually holding that expecting price appreciation all the time?
No, I don't. I don't consider gold an investment. It is a hedge. Mm-hmm. And I am expecting a collapse of the system, which is why you're into cyber currency now, which is like Bitcoin, Ethereum, and those guys, which I think is a wonderful idea. But for the average person, they should listen to somebody like you and not me, because I have some Ethereum and I have some, Ripple or something. I don't have Bitcoin because the price was too high when I got into it. But I think we're watching the end of the dollar. That's what I'm saying. So in my newest book coming out, which starts in May, Fake, I talk about the 3 types of money today. One is God's money, which is gold and silver. Gold and silver, silver I think is atomic number 47 and gold is 79. Gold and silver will be here after the cockroaches go extinct. So they'll always be here. Mm-hmm. That's God's money. And then comes government money, which is fiat currency, which is done by government decree, which is the dollar, the yen, the euro, the peso. And then there's people's money, which is cyber currency, on the blockchain technology. But the reason I would listen to somebody like you is, there's a lot of hype and BS in cyber currency, right? So I think the dollar is toast because gold and silver and cyber currency are going to take it out.
So, okay. So that takes me where I want to go with that. So you all have a little bit. So is that how you're thinking about crypto these days? That, well, let me not lead you. Let me ask the question. How are you thinking about crypto, and why are you buying a little bit?
The reason I like cyber currency is the same reason, is you start small. So it's called CYA, cover your assets. So when it started coming out, I just started buying some so I could watch it. I understand silver because, as my wife Kim says, you just buy a little bit and you can watch it move. But if you don't hold it, you don't see it. So you always start small. Start small. My first real estate deal was $18,000. I paid for it with a credit card because I wanted to go 100% debt. Now, if I went, Jared Kushner, which is security rating was just turned down, that sucker's first deal was, I think, $1.6 billion, and today it's worth $800 million. That's what happens when you're cocky.
Yeah.
You don't know anything about debt. Don't start at $1 billion. And the same as currency. I started with 10,000. And so I just own a little bit and I watch it. That's what I do.
Yeah. So perhaps the most common response that I get when I talk about crypto, especially amongst the older crowd, is I don't know anything about it, but sounds like a scam. And whenever I hear that, which is fairly often, it takes a lot of patience not to just unload with both barrels on that, because on the face of it, it is just such a ridiculous statement. But what would your response to that be?
And the problem with old guys like me is they don't know how bad they're being scammed. The US dollar is a scam. And these old guys, my age, they've got their heads so far up, they can't see anything. They've been had the blinders pulled over them. So that's why, for them, Susie Orman or Dave Ramsey is their teacher, not Kim.
Well, and, in their defense, I will say the way that I got into crypto assets is I was retired from the investment game. I was living happily on my farm here in Aiken, and I hadn't thought about investing in years. And a friend of mine inherited a bunch of cryptocurrency, and she, knowing that I'd been in the business, asked me about it. And I will concede, as I tell the story often, that my first gut knee-jerk reaction was the same. It was, what I wanted to say was, oh my God, sell that. Are you kidding me? And likewise, I didn't know anything about it. I really literally didn't. But the difference was that rather than saying that and recognizing it for what it was, which is a completely uninformed opinion, I did what you always counsel, which is, you are fond of saying that you can invest time or you can invest money. And so I started by investing some time to find out what this was really about before I formed an opinion. And I came to the conclusion, as you have, I think, that not only is this legitimate, but if done correctly, there's a real opportunity here potentially. And but in this day and age, I just find a lot of us, we probably all start as skeptics, but too many people just end there. All right, let's say someone's listening to us and the message is hitting home. They really want to become more sophisticated. Other than reading your books, playing your board game, what would you tell them?
Well, you said it earlier. There's basically two assets we all have: time and money. And most people squander time and money. I have a lot of friends. I don't know how they can go on vacation. And I'm busy working, having a good time doing this. And they're sitting out there listening to their financial planner tell them, oh, the stock market's up. Don't invest in gold. It's risky. Don't invest in Bitcoin. It's risky. Don't invest in real estate because it's risky. The reason financial planners tell you that is they don't get commissions from gold, silver, real estate, and Bitcoin. It's always, what is that called? Anyway, it's self-interest.
Mm-hmm. Conflict of interest.
Huh? Conflict. Well, It's not even a conflict. It's called idiot. I met this guy who finally came up to me, and he was a financial planner, and he says, I finally heard what you're saying. He says, I feel kind of guilty because I've moved. He's in Washington, D.C. I moved a lot of sophisticated people who have MBAs, PhDs, and all this into the stock market, and I'm afraid the thing's going to crash. And I said, there's nothing wrong with it crashing because that's when I get rich. He says, yeah, but they can't write the sucker down. I said, then that's a problem.
Yeah.
You see, you'll make money going up and down, as you know. And the average person is counting on it going up. And that's Ben Bernanke, Janet Yellen, Greenspan, and they're a bunch of liars.
Yeah.
They know they're lying to you.
I got an email just today, in fact, about cryptocurrency. Someone had listened to my podcast and they said, Kim, crypto is just going down and nobody's making any money. And I don't even know how to respond. I really sometimes, I'm obviously rusty. I've been out of this for a while, and I've lost my ability to respond patiently, I think, because I thought, well, you probably shouldn't be in if you really don't understand how this works.
Well, I mean, Kim, does the stock market go up?
Sometimes.
No, it goes up. Does it come down?
Yes. Sometimes.
That's life.
That's what it does, right?
That's life. And the idiots think it always has to go up.
Right.
You can't help those people. So that's why I would say listen to Kim Snyder, start small and just learn. Like I didn't start flying the first day. I started a little teeny-weeny little, T-34 trainer pilot. And then 2 years later, I was in Vietnam. And so the average person has it in them, but they're too lazy to learn. They listen to, like you said about when I met you, I don't need your help losing my money. And that's where most financial planners are at, because they're not really rich people. They're salespeople.
That's right. That's it. They're strictly selling the thing that makes them the most commission, which by definition is the thing that doesn't make you rich. Well, makes them rich instead.
I don't blame them. They're going to say real estate is risky. They're naturally going to say Bitcoin is risky. They're naturally going to say everything is risky except what they sell. And they're salespeople. They're not rich people. They're not professionals. My rich dad often said the reason they call a broker is they're broker than you. But you can't. There's no sense talking to them. That's why I think you're doing a podcast is a good idea because. I would say if you really are interested in Bitcoin or cyber currency or blockchain, I would come talk to Kim Snyder, start small, and follow her along as the markets bounce up and down because that's a real market, right? That's it.
Yeah, that's it. Let me close this up here, Robert. My last question for you is, what is it that you know about investing today that you wish you knew 20 years ago?
Well, I think I was too conservative. Like I said, I went on my old gold. When I was in Vietnam when I found out Nixon took the dollar off the gold standard. I was flying behind enemy lines looking for gold, an idiot. But anyway, I was too conservative. I'm on a gold standard. I mean, real gold, not fake gold. None of my gold is held in banks or any of that stuff. It's held overseas in private vaults legally. I transferred it legally. But I think I was maybe too conservative.
In what way?
Well, I know my objective was to go to gold and silver. That's it. I knew it. And today I have hundreds of thousands of ounces of gold, not in America, outside of America, legally. You can do it legally and illegally. I just don't trust my government. If you trust the government, I'm sure Mr. Trump is going to do his best for you. And he's a friend of mine, but he can only do so much.
That's an evil laugh, Robert.
Well, Kim, you and I, that's when I fell in love with you, and I was talking to you. I think it was your financial planner. You said to us, look, I don't need your help losing my money. What did you say exactly?
Yeah, I mean, that was basically it. Was, I can lose this money just as well as you can. So I mean,
and the difference was,
I paid you for this. So
yeah, you got a commission.
So yeah, this is crazy.
And that's the entire system. So when those people say that Bitcoin is risky or cyber is risky, they drank the Kool-Aid, man. The US dollar is gone. Look, in the year 2000, there was one currency. It was the US dollar. It was called the reserve currency of the world. Then came the euro, 1999. Then came the yuan, which is now backed by gold. And then came Bitcoin or cyber currency. The dollar's toast. All you guys saving money, I'll pray for you tonight. The people that will win are the people know how to make money going up and coming down. But most people think everything goes up, and that's why they got massacred out there.
Mm-hmm. Mm-hmm. Yeah. All right. I think that's a great place to close. If my listeners would like to find more about you and Kim and Rich Dad, where's the best place for them to get started, Robert?
Well, it's richdad.com. If I could shamelessly promote my next book coming out.
Please.
In May.
Please. And say as much as you'd like about it, by the way.
Yeah. It's just fake. If you realize there's fake news, but everything is fake today. Nobody's telling you the truth. So if you don't know what's real and what's fake, that's why I wrote fake. Fake money, fake teachers, fake assets. And it's coming out in May. Go to richdad.com, and it's free. I'm going to just it's going to be a rough draft, and I want people to look at read it, and give me feedback on it or advice on it. Because I'm talking to the choir like you all the time, and most people don't understand what we're saying. They drank the Kool-Aid, and they think the Kool-Aid is real, and everything else is fake.
Okay, I said I was going to let you go, but now I'm just going to ask you to elaborate for a second. Okay, so Explain those three things. So what is fake? What is the fake money? What are the fake teachers? And what are the fake assets?
U.S. dollar is fake as they come.
Okay. We've talked about it a lot, but just summarize the book for me, if you would. Like, why is it fake?
Well, in Rich Dad, Poor Dad, I wrote, savers are losers. Your house is not an asset, and the rich don't work for money, because it's fake. Look, the dollar's lost 95% of its value since 1971, and idiots are still saving it, and they're still working for it. And this Trump tax cut wasn't for the middle class and working class. It was for the rich. Some of the tax cuts were permanent for the rich, and some of the tax losses were permanent for the middle class. And the middle class pays most of the taxes. So, and they sit there and go, I went to school, I'm a college degree. Your education is fake because your teachers are like my poor dad. They're very good people, PhDs, but I wouldn't trust them as I could throw them. My poor dad, unfortunately, had no financial education. That's why there's no financial education in school. And it took me going from my MBA, sitting in my accounting class, and I'm not an accountant, but I knew more about accounting than the accounting teacher. And I asked the teacher, I said, how can you teach accounting? And he said, because I have a master's in accounting. And I said, have you ever been an accountant? He just answered me again. He says, I have a master's in accounting. I said, have you ever been an accountant? He said, I have a master's in accountancy. That's fake. He doesn't know jack. And then fake assets, the worst assets are the ones with the best brochures. There's a joke in the Rich Dad Company, the nicer the brochure, the worse the asset. And the people that make the money, as you know, are the early birds who get the worm. And everybody listening to you right now, I would go talk to Kim Snyder. If you're really interested in just learning about cyber, then buy a little bit. Don't bet the ranch on it. And then watch it and learn. You got to learn what's real and what's fake, because all investments go up and all investments come down. The best time to make money is in a crash. And that's how I make my money. And I'm waiting for the crash. Unfortunately, most people are praying it won't come. It is coming. And it's going to be the biggest crash in world history. The biggest crash ever. So that's why I went to my own gold standard in gold and silver and real estate and debt now, and pay no taxes. But most people can't do that, so they should do other things.
All right. Well, on that bright note, we'll
hey,
end.
Kim, it's going to be the best of times.
I know.
But it took you going through it to realize you had a fake advisor, right?
Yeah. I mean, thank goodness it happened to me young.
Early.
and I had time to get it all figured out, I mean, because look, I used to say the same thing as you. It was staggering to me once I realized what had happened, that I had gone to the finest schools that this country had to offer, that I could program a computer, I could read a book in French, I took business law in high school, and yet no one anywhere along the way ever taught me anything about money, anything.
No.
And so when I finally made some, in fact, had a windfall from an IPO, I did the thing that we think that we're supposed to do, which is to turn it over to a financial advisor who proceeded to lose everything that I hadn't managed to spend. And
you paid them to do it.
And I paid them to do it. That's exactly right. And I said, never, ever, ever, ever again will I put myself in that position again. Never. I will be broke first
at this
before I do
point
that.
to say thank you. You did me a favor.
But that's true. And I say that all the time.
I've lost money, and I've had money stolen. I've had bad partners and all that. And I just say thank you.
Isn't that true? If that, and that's the difference too, I think, between, well, I don't know how to label them, but, I think some of us look at those as blessings in disguise and lessons to be learned from. And some of us just look at those as, oh, woe is me. I have such bad luck. The world, owes me something. And that's just, it's not the way it works. I often say I would not trade that experience for anything in the world, because it's everything that I am today is because that broker lost that money of mine.
Right. And I know the reason you teach and talk and do all these things is because at least you want to give the next people a chance.
A fair fight. I want it to be a fair fight. Yeah. That's right.
So that's the most important thing, But most people don't know they drank the Kool-Aid by going to school. Go to school, get a job, work hard, save money, buy a house, get out of debt, pay your taxes, and invest in a 401k of well-diversified portfolio, stocks, funds, and mutual funds, and ETFs. Jim Jones in Guyana called it Kool-Aid. Yeah.
Social proof is an amazingly powerful thing, and I think going back to the crypto comment that I get often about, well, I don't know anything about it, but I don't, it must be a scam. It's all social proof. In the absence of certainty, we look around, see what everyone else is doing, and do the same thing. That's how Jim Jones got those people to drink that Kool-Aid. And social proof is very dangerous. You have to think for yourself.
Right, and the reason I don't call it scam, I call it Kool-Aid. But most people don't know. The student loan thing, $1.2 trillion. It's the biggest asset of the U.S. government.
I had not heard that.
Office. You look at their financials on their balance sheet. Asset number one, student loan debt. And they learn nothing about money. That's criminal. Absolutely criminal. So all you Kool-Aid drinkers out there, you have the college degrees, I'd listen to Kim Snyder now. Start small, learn.
Well, thank you for that, Robert. I do appreciate it.
Anything I can do to support you in teaching and having people wake up and smell the coffee, not the Kool-Aid, I'm happy to do it.
Awesome. All right. Well, we will end there. I've taken enough of your time, but it's fabulous to reconnect with you. And hopefully when you guys are out this way, you'll stop in and stay at the farm.
I would love to. Just don't get me on those horses, because I never got along with a horse yet.
Okay, let me just elaborate on one topic I didn't quite get around to like I wanted to in the interview. And that is the similarities between Bitcoin and gold. Many people mistakenly believe the use case for Bitcoin is to be able to buy pizza and beer with it. In other words, digital cash. And I think that's because of the unfortunate naming conventions used by the inventor, Satoshi Nakamoto, before we really understood what it would become, what it would grow in, what it would be when it grew up, okay? But its best and clearest use case isn't as digital cash at all. It's digital gold. Specifically, as a store of value that many people believe will supplant gold, real gold, physical gold, in whole or in part, as the world's store of value because it is a better gold than gold. Unlike Robert's physical gold, which you heard him talking about, storing hundreds of thousands of ounces in overseas underground bank vaults, Bitcoin is portable, it's divisible, borderless, and censorship resistant, meaning you can literally walk around with $1 billion of it in your pocket if you are so inclined. And you can carry that across an international border and no one will know or have a say. Not only that, you can send it around the world from me to you in an instant. So the reason I was asking Robert about his thesis for gold and whether he held it as a hedge or an investment, which you'll recall he said was as a hedge against the crash he sees coming, my reason for investing in Bitcoin is the opposite. I hold Bitcoin with the expectation of profit if and when a large portion of the world's gold holders migrate to digital gold, as I believe they will. And the potential for Bitcoin to act as a hedge in the event of a crisis is secondary. So I am exactly backwards from Robert. My primary goal in holding digital gold, i.e. Bitcoin, is price appreciation. And it's nice to know that if the doo-doo hits the fan, that Bitcoin may also come in extremely useful. Robert, on the other hand, is holding physical gold because he feels fairly certain, as you heard, that the doo-doo will hit the fan. And so he's not holding it for price appreciation. And I'm going to have a talk with him and Kim about how their crypto portfolio is structured, because if I was advising them, it would look very different than what it does now. So, maybe they'll have me on the Rich Dad radio show podcast so I can explain. Hint, hint, Kim and Robert. Just something to consider, and as always, I hope you found it helpful. Now, if that piqued your interest and you'd like to learn more from me in an easy, quick, digestible format, then I would encourage you to go to my website, which is sanecrypto.com/quick start, and get my free Sane Crypto Quick Start Guide, Secrets of a Portfolio Manager Applied to Cryptocurrency Investing. That free download includes the 5 questions that you should ask and answer before investing, and a lot more. You will also find the full show notes for this episode at sanecrypto.com/podcast with links to Robert's books, my book, The Rich Dad Company, some of the articles and statistics that we quoted from, and a bunch more. Again, the Quick Start Guide is sanecrypto.com/quick start. And the show notes are at sanecrypto.com/podcast. And finally, if you have a question about today's topic or anything else really, just email me at askkim@sanecrypto.com. I read and answer every email personally, as well as answer some of them here on the show. And speaking of this show, everything said on this show is for educational purposes only. Nothing should be considered investment advice. Past performance is no guarantee of future results. All investments involve risk, so do not, under any circumstances, invest money you can't afford to lose. That's it for me. I'm Kim Hughes. I'll be back next week. Until then, may the crypto gods continue to smile on us all.